in the name of recording, let's do it the right way. We're into the end of January, guys. It's January 26th. FOMC, for you guys watching it live, FOMC is tomorrow. I keep bringing that up in the trading room. It's important. Tomorrow, 1 o'clock, there's the statement that's going to come out. If you guys aren't in the team room, make sure you send an email and we'll get you set up. Take advantage of that. Go in, contribute, or just listen. It doesn't matter. I go in there and I like it. It's just a way to keep you from being alone. So make sure you take advantage of that. If you're in this meeting, have access to it. So just send an email to edge@marketdelta.com. And for you guys watching this in the future on recording, as of now, you should have access to it. So inquire about it, and we'll set you up. It's called the Team Room. It's essentially what Track 6 is on the edge.marketdelta website. Get involved in it because, like tomorrow, the FOMC the FOMC meeting comes out, the statement at 1 Central, we could kind of preview and talk real time on what the heck's going on. That's going to be the highlight of the week and the month. Could inject some new volatility. It could be a game changer. We don't know what the heck's going to happen, right? But it is important, and most people don't know how important it is, and they certainly don't know how to make heads or tails out of it. So make sure that you're aware that's what's upcoming this week. I also mentioned this for guys who aren't in the room. GDP 7:30 this Friday could be important. It's the first look at the fourth quarter of last year. So that's relevant because it's so close time-wise. That could be important, especially if it misses. Really only if it misses. If it doesn't miss, it's not as important. Chicago purchasing managers could be important at the end of the week. But way before that, tomorrow we've got this FOMC meeting and their statement 1 Central. Can't say that enough. Make sure you know where you're at. And if it's a team room, then be there. Today, we're just going to go over quickly some DOM exercise. And it's funny how DOM stands for depth of market. It's spelled DOM, but we call it DOM. We never called it DOM or anything in the early days. It was called front end. We were trading, what front end are you trading on? It was never, DOM wasn't really invented, or that phrase didn't come about till like 05, 06. Or at least I didn't hear it till then. Front end is always what we talked about with the price ladder. That's another phrase, price ladder. Remember, it wasn't a price ladder. If maybe you guys don't remember, it wasn't a price ladder to start. It was an order book. So ladders came out at like 2001 and 2 and patented by Trading Technologies, a lot of the look and feel. And Market Delta has acquired those patents, licensed those patents so we could show the price ladder like TT does. And that's what we're going to look at today. And James reminds me, yes, tomorrow, 9:30 on Wednesday is the oil inventory number. And that's important because, in months past, it wasn't important to us, and you guys know how important it is now with the influence oil's had on the ES. So inventory number on Wednesdays are going to have a big influence on crude, which is going to have big influence on us. So let's start this meeting off with the chart review. Like I said at the very beginning, if you're not really liking a lot about this new chart and the way George has kind of showed us a good periodicity on how to use this chart, then you're crazy. Let's look at the chart. We talked about this last week, call it station to station, because that's what markets do. Right now, as we're trading, we're about to, I wanted to put this in before we went up, that we're about to get through the tops here. And this green line I just threw in here, you guys got to know this like it's the back of your hand. See the middle of this, what would be the middle? Let me get a pen. Let's go with green. See the middle? If you got to know how to draw a rectangle. That should be easy, right? The middle of it. What's the middle of it? 91 roughly. If we can get above 91, you should be bullish. And now they should, based on all this fight and all this time, should blast through 93 half. So I'll come over here and I'll buy 93 halves, smaller size, and I'll risk a few ticks to make a few more just to see. Well, I didn't buy 93 halves. Good. I'm doing this on sim, by the way. I'm not going to just reach in there and buy it. What did I get filled at? 93.25. So let's just play with this as an example. The market should, now that's a bad location. Why? Because I just go over there and buy it. I'm going to show you guys on the other screen in a second. I just go over there and buy it. I'm just trying to show that I could be long and okay as long as we stay above 91. And I think they take out these two tops and they take out this top over here and they fly through the middle of this range. You see how hard it's been to get through 95? And this brown line, how we fought over it like crazy? You see how that's a bad entry just to come in after it rallies? You need it to rotate a little bit. But for example's sake, we're just going to let this play out. I'm going to show you how to get out of this position, either for a winner or a loser. This green line is important because it takes the middle. How's my pen? It takes the middle of this fight intraday from today. It should be pretty apparent, the middle, and why we kind of got bullish and jumped just now. A better entry would have been where? Let's go to our other footprint chart. Just tie it down. Would have probably been through this little chop. Let's put a pen on it again. We got to watch this trade. It's 4 or 5 ticks against me. It's not real, but I wanted to show you how to get out of a trade and not what happens when you reach. See this right in here? That's a better entry, closer to this, because then you're closer to the middle of that. You see how you continue to take your rectangles and draw it? Your mind or your visually, you got to see these boxes without drawing them. You really do. And now this thing, you reach and you buy it up in here. You take all this heat instead of buying it down in here. But hey, that's the game. You don't want to take heat. I don't like to take heat. You guys know that I wouldn't have reached and bought it there. Whether or not I'd have bought it here, I don't know. But for example's sake, I'm long 93. What am I long? 93.25. It's in sim though. I'm going to show you the dome in a second. I just want to give you this as it rolls out real. We've got to get above this 218. We had a couple chances to roll. They got to get above this 218 where he sold it. Where did he sell it? 92.75. We'd like to see this thing run. There's going to be a quick move up if they can get back through these 93.75s and 94s, 95s, up and away. Let's keep an eye on crude oil. Well, lo and behold, we're able to keep an eye on crude oil because, let me show you this. I'll give you a ta-da moment here. You guys should be seeing all the domes, right? Here's where I'm long, 93.25, 6 times. Again, sim, want to be clear. Well, let me make sure I'm in sim. Yeah, I reloaded. So let me be clear. Forget about the P&L. Forget about what you're long. Let's just say that probably taking all that heat, I want to scratch a couple of them. And I'm going to be able to do that in a second. But you have your resting orders up in here. You don't have to have all your, it's all, this isn't about trading exactly a certain way. And by the way, I missed the scratch. I should have been able, now I'm looking at, hold on. No, the only 53 traded. So right in here, you got oil. This is what I said. Make sure you watch oil. Well, we're going to be able to watch oil because it's right next to us, okay? We're going to be able to watch the Euro stocks. It's right here. The NASDAQ's important. The bonds are over here. Are you guys able to see this screen? Yeah, all right. So right in here, I probably don't want to scratch these, so I pull them. I probably say, you know what? I think they could do better than this. I think there's buy stops above it. Maybe I do want to scratch it. Maybe I want to try to work to get out for a -1 or a -2. All about what you want to do is how you're going to put your orders in. If you want to scratch it, you're not guaranteed a scratch on anything just by putting an order in there. If you want to guarantee an exit, you got to hit it. You got to hit the best bid. So now I get out at 92.75 just to show you if guaranteeing an out, you got to hit a bid or hit where it's trading at right now to give you a better chance at getting out. If you just say, oh, I want to scratch it and I'll offer it here, it doesn't mean you're going to get filled. So now I pull this. I think there's buy stops probably, I think there's buy stops above 95. The problem with this trade is I just reached and bought 93 evens or quarters or whatever just to get long, and the real buy was the pullback to where the stop started. So what you have to understand is the context of it's not so much where you got in, it's about, here, I'll just keep a couple on. I thought I got out of one more. I should only be long two. So let's say if I offer what the offer is right now, or I pull it because I don't get filled. If I hit a bid, I'd hit it there. Then I could offer it up, not filled because there's a small offer here. Then I pull it, and I'd have to hit 93 halves if I want to get out. I could probably offer 93.75s, and I'll get one of them. See how it came back bid a little bit? Now, I'm not trying to be micromanaging stuff. Just trying to help you get the heck out of a trade and understand how to breathe when you're in it. So be objective when it's objective. Here's these buy stops that we anticipated. You get out of another one in there. Again, this is sim. This is not my real account. If it was, I probably wouldn't have been long that high. It would have got long a little bit better. Now this market's moving up. Why? Because we know that there were buy stops above 94 and 95, meaning how long is it going to consolidate there without going up? And now it's like this last one, let's just say, heck, it could be, I mean, you could put it at 99. You see some big orders there. You put it 2 ticks below 99 even at 98 quarter. You could put a trailing stop in. You could do all kinds of different things. I think that you look at it and say you should have a good stranglehold on this. You've seen oil keep creeping up right here in the dome next to us. You see over here on the far left, bonds continue to go down. When you review this recording, I want you to pay attention to what oil was doing and what the ES was doing and what the bonds were doing together as we go over this dome. Just pay attention to, did you see this go down a couple ticks and then this thing jumped? That's what you got to continue to watch and review. But if we take this chart back over here, I'll just bring it to the screen share and say, hey, listen, through that green line, we were going to get bullish. And we knew that there were buy stops above those highs. If you didn't know it, you had a probability or an expectation. Then you see it happen, we're not so damn surprised. That's where that ES station to station chart is going to help you. It's going to help you with context. Then let's look at our other 4PNF, and I'll just drag it over here. You see these thin spots that we talk about every day? Well, being long from down in here, you want to see this one hold or this one hold. You don't want it to get down here because then it's fine. It still could be bullish, but why go down there? This is just the tiny retracements. Tinier the retracement, the better chance we have of keep plowing north because you're not letting other shorts out. We don't want shorts to get out. If you're bullish or long, especially if you're long, you don't want shorts to get out. Don't give them a chance. Keep them stuck, keep them whining, keep them losing money. What do you want? The reason why I'm offering 98 quarters is a couple ticks underneath 98.75. In fact, I might just say I'm going to offer 98 evens. To heck with it. I don't care about a tick or two. I want to see oil over here continue to ram up through here. I want to see oil do that. Now I have a better chance of getting filled. I want to see over here on the left the bonds to get hit. Bonds aren't as weak as I'd like them to be at this point. Let me pull up a bond chart here real quick. They have come out of a consolidation. Here, let's bring it over. I should get closer to getting filled than I did because oil's going again. I should be able to get filled in these 98 evens. If I don't, I'm going to be PO'd because this thing just jumped twice. And here it goes, meaning 98s are trading. I didn't get out yet. They should be able to push through here. If they don't, I'm going to be mad, even though this is sim. Then I'm just going to offer 98 3/4 and be the hell out. That's what I would do in that sequence. Why? Because this is it's probably going to go up, but I'm not going to get teased and have it rotate down. They did go up, but they should have went up higher faster because this guy shot through 80, shot through 85. It's trading almost 90. this thing should be trading into this 1,000 lot here and into this 800 lot. It didn't, so it might be a few tick pullback. All right. Hopefully this session, I just kind of spitballed it. I wanted to give you guys a sense of how to get in. You take a little heat, but not really, because it's the way it worked out. You were comfortable above a certain price the way this is. And who cares that the trade worked? It's not about it working. It's about the thought process and the mechanics of it. You want me to do another Periscope? No, I'm done Periscoping. I don't want the servers to start humming. With all the people that come in there, the servers start to hum, and I might bring Twitter down as we know it at some point. See this? Oh, you guys don't see this. Let me bring it over here. See this consolidation? High, 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 high. The next time up through it, it's going to take out that 1,000 lot. It's going to take out that 1,000 lot. We're going to go up. We're going to trade in evens and probably O2. They're going to take out this 1,000 lot. So when you guys hear me in the room say there's 1,000 at 98.75, this is what it looks like. This is where I'm seeing it. You understand? They're not afraid of it. They're going to take them out. These bonds go down pretty quick. That'll be the impetus to make it go that fast. Let's take an oil chart. Not an oil chart. Let's take a bond chart. The ones that we look at. Look at this. Comes out, comes down from like 26 to 22 when we rallied. Make sense? If they could hammer this thing down closer to like 18, at the same time we'll be trading evens. So you got this bond, this green line, to go from 26 roughly down to 21. S&P's rallied through the 94. This room, we started at the same moment where you should have not been long. I could care less if you're long, but you should have been bullish after, bring this chart over, after they took out this line and went fast right in here. See this big line? This pop? That's when you should have been bullish. I don't care if you bought it or got long. You shouldn't have been bearish anymore. You should have said that divergence that we had with crude oil is off the table. Time has went by. They duked it out. They're fighting. Oil stays strong. We're going to find through 95. And that's exactly what happened. Station to station with the chart and with your thought process. Who's got questions? Someone's got to have some questions. George, let me enable your mic. Do you want to talk? George is here. George, you're unmuted.
Yeah, can you hear me?
I can hear you. You sound good.
All right.
Do you have anything to add?
No, you covered it. Good stuff.
I think it.
Then,
Go ahead.
then, ultimately, if you're, you want to trade with a longer term look, maybe the extension, is a potential upside target. But yeah, good stuff. I mean, in that consolidation, you could have really used the Delta chart too, because they were like wailing on it, minus 1,500 at a time, and the best they did was leaked it below 88. Let me see how much they leaked it. They leaked it below 88 by 1, 2, 3, 4, 5 ticks. So, I mean, that was like a transitional strong move back higher, and then, you had to be lining up them stops above the highs. A couple of us kind of caught it in the room, the edge room. I caught a little bit of it, not the whole thing, because I thought the first time it went to 91 it would have been gone. But then it's that, because it wasn't gone, it's like, the thing's going to rotate. So you can always, get it again or whatever. So that was an important statement. Was what you said. If you didn't fill at 98, you know, you might as well sell 97.5 or 97.75 because
You'll be chasing it down to here.
you'll be chasing it down, and then you know you'll be dealing with that psychological damage. So that's one thing about being a trader is you could always you know get back in. People don't realize that, you know. That's why you know you could get, you know, if you're a larger trader, you can get memberships because that gives you an exchange discount, and because you know the trading profession somewhat, you know, at our level should be fairly active and not, you know, emotional about, you know, something working. You know, it's picking up the station to the station, taking advantage of as much as you can with always being cautious of, you know, you have risk on the table. You also have to respect the risk and, you know, good stuff. And then you know, you have to know how to work your dome. That's very important.
Well, that's what I'm doing right now as you're talking. I'm purposely scratching orders. And again, this is the way you use sim, is to put yourself in a position to, can I hit this 96 half and buy it? No, I can't. Now what do I do? Wait, it didn't even fill it. Damn it. So now it's running up. You want to scratch it. I want to hit, where do I want to hit the scratch? Well, if I offer, can I scratch these? I don't know. If I hit the bid, I missed it. If I hit the bid, I don't want to hit the bid. There's 400 there. I want to wait till it gets on. This is just a tool. Guys are never going to necessarily trade like this, but you're learning to understand how to work the dome. I buy it there and then I offer it. That's a scratch, right? So I buy 97 halves and then I offer it right away. Try to scratch as many as I can. If I can't, I got to take this -1. See where my cursor is? Got filled. Scratched it. How many could you scratch? Just keep scratching. Again, this is demo, so it's pretty accurate to how they fill you though. The way the demos work is, you know, it doesn't one contract trades you get filled. They've been built to be pretty accurate to your real time, not exact real time fills, but much closer than just, hey, if the price trades you get filled. You know, make sure when you're on sim it's not one of those things. I don't even care if you guys end up just trading stocks through Scottrade. This is an important kind of exercise to go through. As you understand buyers and sellers. See this big seller up here? They're going to take them out. That's going to trade. I'll shave my head if they don't today. I won't shave my head today if they don't, but if they don't take them out today, I'll shave my head on Periscope. But it's just, will I be long when they take it out? I don't know. Probably not, especially doing this meeting. But that's what's going to happen. They just jumped though from like what 96, 90 here. Well, you guys can't see the chart. 96 even, 95 3/4. They just jumped 2 points. I could buy it here, anticipating it taking out the 98 even, 98 quarter. But I know the rubber band just stretched from 95 3/4 up to 97 3/4. So I'm probably better off trying to buy something, you know, down a little bit in the book, or trying to see a big jump in oil to get me in. I need really something to happen.
Hey,
Go ahead.
let me give you guys a look that might be tradable. All right, you want to pull out the 6PNF chart. If you pull up the 6PNF, yeah, you see that the tops and the bottoms of that. There's a tradable small structure with a big offer on top. See that? So let that develop a little bit longer. You know, make it a recognizable small structure.
Right in here, George, you're talking about?
Yes.
Yeah.
Yes. Right now, real time.
Yeah. Well, here, the 4PNF, you kind of see that because they're top, and the 6PNF takes some of the noise out.
Yeah, you got your magnet, you got your small structure. If you know the bears shouldn't easily get bailed out up here if it's going to take out that offer. So it really should have a hard time going below the bottom of it. You got to anticipate that this is going to be a small sideways consolidation.
Yeah, and it has been. So I don't want to buy it up near the high. If I'm wrong, I'm going to have to get out and take heat pretty quick. If I could maybe find a place in the bottom of the predictable, the assumption of where the bottom of the consolidation might be down in here, I could tag the oil here and maybe where's the bonds? 20 bid, 20 offer, see the bonds. You know, when I quote the bonds, I go 20, forget about the zero at the end. It's 19, 20, 21, 22, 23, and up. So here's another thing I should have said. My audio is pretty accurate real time, but what you guys see is like maybe a second or so behind. So when you're watching this, just factor that in. So like I put an offer in right now, which you guys might not have seen it till right now. Just keep cognizant of that. Anyhow, 20 bid. If you want the market to go up, the ES, you want this market to go from bid to offer, which means this goes away and numbers come in here. That means it's offered. Right now it's 20 bid, 21 are trading. It went 21 bid, 21 offer now. 20 bid, 21 offer. That's why it's important to quote, because it's 130 by 90. They're back and forth. I have a better chance of getting filled my 96 half over here if this goes 21 bid. If it goes 20 offer like it just did, you see this one up a little bit. Now that's micro analysis. But if you can't like understand it on a micro level, you're not going to understand it building it out from there. Trust me, it'll be a lot easier to understand it building it out from there if you understand it on the micro level, even if you never traded on the micro level. Your edge is going to be what's simple. If for whatever reason I'm sitting here and something comes across the news that the Fed is going to no, not the Fed. Give me something else, George. Like China has created this new stimulus that they haven't tried, that whatever. I would do this. I would just come in here and buy something bullish, some obvious bullish event. Just come in and lift offers and buy it and be long as many as I can, depending on how bullish it is. I know I'm guaranteed to get in, and then I can put my offers above, to start to scale out. I don't even care what the particular prices are. That's if there's a big bullish event that just happened. So let's say the guy said on the squawk, just kidding. Well, then I could get out. I have to get out right away. If I got a profit, I just hit the bid. So right now I could hit flatten, or I could just hit the best bid. I got 3 more left. I missed them, then I put my cursor here, watch, missed them, got them, canceled them, and this will flatten me up once this registers. See, it's +3, it goes 0. So, I mean, that's like quick moments. And you don't have to be, super fast to understand how to react. If oil just went, here's another thing, like if OPEC met and said they're going to have emergency meeting to cut production, and you could buy oil right here and it didn't already pop, it's a trade of the century. Like right in here, I think there's buy stops above it. Let's take a shot. We try to buy 4. And the way I trade sometimes is try to take just a 1 or 2 tick profit, especially if I'm not that confident in the trade, and take a couple out there. Now there's 4 on. Reminder, this is sim. Try to scratch it, take a -1. Not worrying about the money, worrying about the idea. Now I'm out. I don't know. Took a shot, pretty much scratched it, took a -1. I'm watching oil here. It's got to get through $32 a barrel. It's still midday. It's harder to get momentum. We had a little bit of momentum here through 98 quarter. They're probably going to go. I'm not on the team right now for it, but this is me saying they're taking out there. I don't have to shave my head. They took out that order. They're going to take out this 1,000 lot order. I'm not long though for it. Look at oil. See, now I'm talking and looking at this and not looking at oil. It just jumped 10, 15 cents. I should have been buying 98.5, 98.75. Should already be long again. I'm too busy talking here. And then you can get out a little bit below there, but there's buy stops above even. They're going to take that out. They're going to go to 02, which was, I think, Friday's high, 02 half. So this tradable structure George talks about is when we came on in this meeting, this damn thing got bullish in this bar. After what everybody has learned, you got to get that. We're bullish in that bar. Find a spot to get long, and you'll never find a spot to get long unless you find a spot to get out of that long before you find the spot to get in that long. I'll say it again. You'll never find a spot to get in that long until you find a spot where you're going to get out of that long if you're wrong. Period. This is what stinks about midday momentum is you don't get it. You get this kickback like it is. It's going to make it choppy again. You get choppy markets, and a decent move happened already midday, and that was when we came on this meeting. Go ahead, George.
Yeah, unless you're a completely momentum trader, like you have the beginning stages of a tradable structure. You broke out to the upside there, and now you're probably going to come back and test the bottom of it, which is 98, or no, I'm sorry, 96, 95,
Yeah, right in here. But you don't want to get too much to the bottom. You want to stay like in the middle.
Well, they broke it out a little bit to the upside, and if they break it out a little bit to the downside, then you got a wall that, all the earlier shorts that are not disciplined and are still short from the day session will be the baby birds that'll try to, give you some support. So I'd say, your range is going to be between, 94-ish to what we just made the high. I don't like the idea of shorting it, though. But there's a potential that it could break down to about 95 just on these rotations right here, And just on these rotations, you have to consider, well, the bottom of it would be 96, and the top of it would be, the high that we just made. But, compared to the amount of volatility that we've had recently, it's not unfeasible for it to go down to 96 or 95 or even 94. It really wouldn't be that big of a move compared to what it's been like. So.
No, that's good. And I want to reiterate, for future people that watch this and for you guys watching it now, I don't want you to trade like me or like George or like anyone else. I want you to trade like yourself, but I want you to understand what it is to trade the structure, to find the structure of the market and have it be tradable. All right. I try to give people a sense of. Someone just asked, what does it mean to look at the size of this market? If you don't quote the market, you're not going to understand that it's 98.75 bid for $1.50. There's only 30 at 99. Now it's 99 even bid for $1.50, a quarter. So if I'm trying to scratch this, Mike, I'm going to look to see when this trading, see this gray shade? Well, that's showing you what's trading. So they're hitting the 99 even bids. Then they're lifting the 99 quarter offers. If I buy this, there's only 70 there. Maybe I have a chance to scratch it. So I bought it. They're trading. But if this starts going down to nothing, I got to get out. Well, they just filled me. 99 quarters traded enough to do that scratch. I'll hit the 99 evens if this gets down something low, starts to trade out. And Ren, this is just a drill. Like here, I could buy that and probably scratch it real quick. I did it so fast it didn't even register my buy. It just registered my sell. I'm short and I had to get the hell out. So I did because this thing is about to move through the top of consolidation and take out this 1100 lot. Oil had went from 32 even to 15, back to even, back to 15. So here, just keep things simple. With all things being equal, if there's in real time 1,000 on the bid and only 2 contracts on the offer, what has a better chance of happening? The offer going bid or the bid going offer? the offer going big because there's only two guys there holding it, right? Two contracts there holding it. So hopefully that answered it. Like right here, I could hit this for, with all intents and purposes, be short and be able to scratch it. And then I did. Just playing the numbers that are on both sides. So if you look at track 5 at some of the videos, you see this fill in and it's information. If a bid is hit and a big offer comes in behind it, which would be in there, that's important information. I can't reiterate and stress enough. Drills, some semblance of an exercise has to be done if you're going to lose weight and get fit, if you're going to acquire skills to trade. It isn't just going to be like read and understood, shown and understood. Just some action to practice. So you put yourself in a training camp for a football team or at their practices as they prepare for a game on Sunday. You know, what would happen in that practice? Well, I tell you what, we're doing a really good job at recreating that in these weekly meetings. But like if you guys were physically here in our offices, there'd be training rooms where, all right, guys, show me how, here, you're going to sit down here and you're going to practice this drill. Then we're going to go over and see how you've done in it. Or, that would be the training. That's what we taught guys. We taught guys how to function their dome and then worked it out from there. Had no idea the style trader they might become. They could be a swing trader or a pure scalper, but they better know how to execute either way, right? This is kind of let me pull this chart back over. I think this was a good session. I wanted to review the importance of the 6 P&F station-to-station chart, so you guys do that from back-to-back sessions and just go over some dome stuff so you get comfortable clicking around that damn thing. Now, this is not great follow-through. We had great follow-through in here off of where was it? I think it was this bar, right at the top of the hour. We finally got through this little consolidation, and we had good follow-through, chopped a little bit, and then wham, went up. This isn't good follow-through yet. The consolidation is building. The structure is building. If you start to tickle the low of this consolidation, you want to be careful being long because it could shoot lower and shake out longs. And at some point, they're going to blast through 1900, test 2.5, and then see what's up above 1900. If this happens, then I think is the phrase. If this happens, then this should happen. Set yourself up with it. Any other questions before we wind things down? Follow us on Twitter. If you don't already, Market Delta is our handle. When I do Periscopes, if you also put the Periscope app on your phone and log it into Twitter because it's already a Twitter app, essentially. They're married. It's the same. Twitter bought Periscope. But if you put the Periscope app on your smartphone every time and follow Market Delta every time I do a Periscope, it'll ring your phone like I'm calling you. I forgot to record this session. No, I'm just joking.
How do you get your Twitter to notify you? I got the app.
You gotta rub the phone on the front and the back, real lightly, with sandpaper.
No, I don't. I can't. I honestly can't find it. Like how to do it.
I think that if you don't set it, I think it's in settings, and if you don't set the not to notify you, it will. Might be by default. Ask Dave. He's the IT, in-house IT. So Matt's got a good question. If we come up to big orders and pull back, is that a point of significance? Yeah. So when you first see the big orders, Matt, usually it'll rotate away from it. But if you're hanging around that big order in the book, the rule of thumb is we're not afraid of it. And if you're not afraid of a big seller, we're going up. Does that make sense? Why, it doesn't notify you when I do my periscopes, George?
Well, if I'm just looking at the Twitter feed, you know, I just have to scroll up to the new tweets.
No, Periscope, you have a Periscope app on your phone. It actually is done through that. And it says, let me show you. I'm going to end the recording for guys watching in the future. Do these drills, do these exercises, and no matter what you trade, stocks, what product it is, find the rotational congestion value.